Welcome to PwC IFRS Talks, your source of all things IFRS, technical accounting matters, business issues, current standard setting, and regulatory updates. I'm your host, Ruth Preedy. In today's episode, we're continuing in our COVID-19 series, and today we're going to focus on IS 20, which is all about government assistance. And we've obviously seen lots of different government schemes to support the economy and people. So we'll be picking some of those schemes today, or some general principles, and talking through some of the accounting implications. And to help me do that, I need a guru. So I'm joined by Mr. Gary Berchowitz. Welcome, Gary.
Hi, Ruth. Thanks very much.
Again, recording virtually. Fingers crossed it works. Okay.
Yeah.
Okay, so let's start at the very beginning. What on earth is government assistance in IS 20?
Yeah, that's a very good place to start, Ruth. So government assistance is defined in the standard as, action by the government that's designed to provide some form of economic benefit that is specific to an entity or a range of entities. And a qualifying criteria. And then what you normally find is we end up talking about government grants, and government grants are further defined in the standard as, forms of transfers of resources, in most cases the ones we're seeing being cash, to entities or to, a range of entities in return for that entity complying with past or future conditions relating to its operating activities.
So as I mentioned at the beginning, there is so many different things different governments are doing around the world. So it's hard to know if everything is government assistance. Are all these different schemes just automatically government assistance in the scope of IS 20?
That's actually a really good question, Ruth. And there's probably two parts to that question. So, the first part is the arrangement between the government or the government body and the entity receiving the government assistance. And by and large, those arrangements will be in the scope of IS 20 to the extent that it meets the definitions that I just went through. I think we probably need to be a little bit careful there with respect to some of the arrangements we're seeing on central bank lending schemes, because I think there's going to come a question, or we're dealing with the question currently, of whether or not that's really a government's assistance or government grant, or whether or not that is really the norm at the moment in the current environment, and all entities that are in the scope of lending are receiving very low interest loans. I won't say any more on that, and I'll let Sandra deal with that question in hopefully a shortcoming podcast soon. But that's really the first part of the question. So by and large, most of those arrangements will be in the scope of IS 20, but then there is the related kind of conditions that need to be complied with, which is normally then the entity that received the grants actually providing the relief or assistance in this, in the context of the government assistance we're seeing at the moment, off to, third parties. And that part of the arrangement is generally not in the scope of IS 20, if that makes sense.
Yeah, it does. Really helpful there. So two important things for us to consider. You mentioned there the central bank lending schemes. And like you said, we've got, more planned in the financial instrument world to have some future podcasts. What other sort of schemes have you seen that, are in IS 20 that you've been discussing?
Yeah, good. Another good question. Maybe ones that are a little bit easier for us non-FI folks to visualize. So, we've seen two that spring to mind. The one is kind of your commercial lessor schemes. So obviously with reduced footfall in physical stores, lessees are under pressure. As a result, we've seen some government relief plans where the government actually provides relief or subsidies to lessors, commercial lessors, but with the condition, either strong suggestion or legally required, that lessors actually pass those reliefs on to the lessees. And so then you've got an arrangement between, government or government authority and the lessor, which is in the scope of IS 20 from what we've seen. We're starting to see other schemes, employee subsidy schemes, where unfortunately a lot of folks are not able to go to work as a result of the businesses that they work for needing to be mothballed during this period of time. And as a result, you're seeing governments in some locations stepping in and actually providing employers with subsidies or reliefs that can then be passed on to the employees during the period of time that they can no longer work. And so again, the arrangement between the government and the employer would similarly be in the scope of IS 20.
Great. So some great examples there of things that do fall in the scope of IS20. I always feel like normally, in normal conditions, IS20 isn't a standard we often go in. So I'm sure IS20 is excited it's getting some readership these days. What does it actually say? How do you account for a government grant?
Yeah, you're probably right there, Ruth. It's probably we're dusting off IS20. I've definitely I've looked at it more in the last couple of weeks, I think, than I have in the last couple of years. So definitely spot on there. But I think actually what's a really important point to note is that, what we're seeing is some situations where before you even actually get into IS20, there is actually a gating question around who is the counterparty that is actually receiving the government assistance or the government grants. Because in most traditional government grant situations that we've seen, there are normally conditions that are attached to the grants that are received by the entity. But that doesn't mean, but normally the entity still, accounts for that as a government grant. I think what we are seeing is some scenarios where the conditions that the government is imposing on entities, those conditions are so restrictive in some cases, or they can be so restrictive, that it actually draws into question whether or not the entity actually receives the government grant, or whether or not the entity is merely acting as a pass-through or an agent who is facilitating the transfer of a government grant from government directly to the third party. And so, if you think of my example with the commercial lessor, I think a question there is, does the lessor actually obtain a government grant that is then transferred to the lessee, or is the lessor merely acting as a conduit through which government is directly providing relief or government grants to the lessee? And I think there where folks probably want to focus on is our agent principal guidance, and looking specifically at the guidance in IFRS 15 to try and determine whether or not the counterparty or the intermediary in the arrangement actually obtains control of the government grant before it transfers that government grant through to the third party.
Okay, so great point there, Gary. So we're almost using some of the newer guidance that's come out in IFRS 15 to support what we're doing in IS20 there around, are you actually the principal receiving a grant, or are you just passing through? Let's make the assumption that we have actually got a grant and we can control how we use it. What does the standard say about if we can recognize, or how we recognize it?
Yeah, so once we're it's taken us quite a long time, but now we're firmly in IS20.
We're in there.
We're the principal party that's receiving the grant. And I think the standard then, it says you can recognize that grant when you've got reasonable assurance that that the entity will comply with any conditions that are attaching to that grant that have been imposed on you, and that the grant will be received. Now, in most cases here, the grant is received, it's provided in cash, and it'll then depend on the terms and conditions that the government has imposed related to that grant with respect to when you book it. Probably also worth mentioning that there's two general models in IS20. Is how you account for grants that are physical assets, and how you account for grants that are more income in nature. I think by and large, all of the grants we've seen to date have been more on the income model, and so I won't spend too much time on the asset model. And I think the idea there is, you receive income or cash, and you then recognize that as grant income when you have reasonable assurance that you comply with the two criteria I just mentioned. So it's debit cash, and then effectively you're going to credit income.
Okay, so do you literally, if you feel like you've got reasonable assurance, when you get the cash, do you literally just go debit cash and you get to credit the income statement?
Actually, thanks for asking that question, Ruth, because I think if you're in the income model, the further principle that IS20 goes on to explain is that you should only recognize that income in profit and loss on a systematic basis over the same period that you're recognizing the corresponding expenses that the grant is intended to compensate. So if you incurred a massive loss as a result of COVID-19, and the government then provided you relief to compensate you for that, you would then recognize it all at the same time. But to the extent that it's, that relief is intended to compensate for a loss that's going to occur in the future, you would only recognize it over time as the corresponding loss is incurred. And that's probably a good segue onto a point we've noticed here, which is in a lot of the grants we're seeing, the government is not necessarily compensating for expenses that entities are incurring, a lot of the time we're seeing reliefs that are intended to supplement lost income or lost revenues.
Okay, so what will determine when the expenses or lost revenues you just mentioned or income actually occurs?
Yeah, so I think that's when we, again, as I mentioned right at the beginning, well, a while back, that's where we move maybe out of the scope of IS 20, and we have to actually look at what is the accounting standard that is driving the expense or loss of income or revenues that we're recognizing. So maybe I can use an example that'll maybe bring this to light a bit more. If you go back to the example I used with the commercial lessor example, now if you think about it, that relief that the government is providing to the lessor is really trying to compensate the lessor for lease income that it will earn from its lessees when it provides them with relief. And so you actually need to look at IFRS 16 and the arrangement between the lessor and the lessee to determine when the lessor is going to actually recognize the reduction in its lease income. Once you've worked that out, you can then go back to IS 20 and say, okay, if this is an income grant, I should recognize that corresponding income in the periods in which I'm recognizing the reduction of my lease income. So it really, there's a lot of interaction, I think, between IS 20 and the arrangement that exists between the intermediary and the end party to work out when you actually are going to book the government grant as income, if you're in the income model.
That's really helpful, Gary. So I think what I'm hearing from the discussion is this actually is broader than just a government grant question, and often the government is giving lots of different assistance. And if you do find yourself in the scope of IS 20, the actual income recognition, you might need to then look almost down the chain of how the cash gets distributed and how the income works in other standards to be able to actually work out your measurement pattern. So lots to think about.
You're an IS 20 guru now. That's exactly it. Spot on.
I've had 10 minutes of IS 20 practice and I'm a guru. I'm not sure about that. So I always do a nice catch-all at the end of the podcast where you can give me all your insights in every other area I've forgotten to ask you. So is there anything else people should be thinking about? I almost said forgetting about, thinking about in IS 20.
Thinking about or not forgetting. Yeah, so probably two things that I'll include in my catch-all. I think the one would just be related to presentation. And there I think the comment would be, when you're dealing with a government grant that is compensating for costs or expenses that the entities incurred, the standard says you can set those government grants off in the same line item as the corresponding costs, so that you recognize the net cost. I think when we're dealing with lost income or reduced revenues, it's not quite the same principle. So I think if folks are receiving government grants that are intended to compensate for lost revenues, either lease revenue or revenue in IFRS, in the scope of IFRS 15, I think I would say be very, very careful if you want to include the government grant in the same line item as the corresponding revenue, because it's probably it's a different standard. And in some cases that may be misleading. It's probably much clearer presentation to provide the government grant in a separate line item, possibly still within your broader revenue category, but I think making it clear and transparent that you are receiving different income streams from different counterparties. And then the last one that I'll say, and this will probably be an ongoing theme that'll be pervasive through all these podcasts, is just related to disclosure. I think we're in a situation with a huge amount of uncertainty, both in recognition and measurement. And I think at this point in time, being transparent, being clear, concise, and comprehensive around what government grants you received, the terms and conditions relating to those government grants, and how that's affected your financial performance and position will be paramount. So when in doubt, make sure it's clear.
The good news, Gary, is that's exactly what me and Tony said on the last one. We kept saying, just make sure you disclose, explain. Okay, perfect. Really helpful. So hopefully this little nugget of information about IS 20 has helped people if you have got some government assistance and thinking through the model there. Thanks for joining us, Gary. I'm sure we'll have you back soon because we've got lots of things to discuss. And for everybody listening in, there is more information available on PwC Inform on lots of these topics. And, let us know if you've got any questions. And if not, stay safe and happy accounting.
The preceding programme was brought to you by PricewaterhouseCoopers LLP. This content is for general information purposes and is not a substitute for consultation with professional advisors.